Have you ever wondered why everything feels upside down lately? Why the news keeps shouting about record profits, record growth, record markets? And yet everywhere you look, people are struggling, businesses are closing, and everything just costs more. Because deep down we all sense that something fundamental is breaking, something invisible but enormous, something that moves quietly beneath the surface of the economy and stretches wider every single day. And that something is what I want to show you now, because it's the gap, the one that has the power to tear the entire system apart if it keeps widening at the speed it's moving right now. For decades, our world operated on a simple balance. Growth meant jobs, jobs meant income, and income meant spending. And spending created more growth. It was a circle, stable, predictable, and self-sustaining. But somewhere along the line, that circle snapped. Because today, companies are selling more than ever while hiring fewer people than ever. They're breaking records in profits and stock valuations, while unemployment creeps in from the shadows. And that contradiction, that impossible equation of more success with fewer workers, is the first signal that the economy we grew up with no longer obeys the old laws. If you could see it on a chart, you'd see two lines that once danced together, corporate sales and employment, rising and falling side by side for nearly a century, until recently, when the two split apart, one shooting upward to record highs while the other sank lower, almost inverted. And that split is not a glitch, it's not temporary. It's the shape of the new economy. An economy where technology replaces labour faster than people can adapt, where the concept of human productivity itself is being redefined by machines that don't tire, don't argue, and don't demand raises, and where efficiency has become so extreme that the system is beginning to feed on itself. Because what's happening today isn't just about robots or artificial intelligence stealing jobs, it's about a structural transformation in which wealth, productivity, and ownership are concentrating into fewer hands, while the majority are being quietly removed from the equation, and this imbalance is showing up everywhere. In wages, in prices, in markets, in politics, creating a society where the numbers say we're booming, but people feel like we're breaking. Look at the data, and you'll see that industrial production in the United States is near all-time highs, meaning the country is producing more goods than ever before. But employment in that same sector has collapsed by nearly half since 1980. And even though output keeps rising, the workers who once made that possible have vanished, replaced by automation, by process, by algorithms, and by global systems that no longer need local hands. And this shift, once confined to manufacturing, is now crawling its way into every service industry, from finance to design, to logistics to customer support, turning what used to be human-driven sectors into automated machines. Corporations, of course, are thrilled because their profits are exploding, their costs are shrinking, and their stock prices are soaring. But what they don't see, or don't care to see, is that by removing humans, they're also removing consumers. And the moment the majority can no longer afford to participate, the entire structure of demand begins to collapse, because you cannot sell to people who have no income, and you cannot grow an economy that has replaced its own foundation. Just a little break, I opened a free Telegram community where I teach how to earn money with YouTube and build channels like the one you're watching. If you want to understand how to do it, there's the link below. Back to before. When you examine the biggest companies and the giants like Microsoft, Amazon, Nvidia, Meta, Alphabet, you realise that the gap is not only between rich and poor, it's between the corporate world and the real world, between Wall Street and Main Street, between perception and reality. Because these companies now control over 90% of all corporate revenue in the country. They set the tone for the markets, and their profits have reached levels that no previous generation could have imagined. But what's feeding those profits isn't human progress. It's the mechanical squeezing of cost, and every cost cut is a person replaced. In the short term, the system applauds this as innovation, but in the long term, it becomes self-destruction, because an economy that depends on mass consumption cannot survive when the masses are no longer earning, and the evidence is everywhere. Small businesses stagnating, wages flat, credit card debt surpassing $1 trillion, savings at record lows, people working multiple jobs just to stay still, while at the same time, corporate profits soar and the stock market celebrates as if nothing is wrong. This is the illusion we're living in right now, an illusion powered by data points and stock tickers that tell us everything is fine, while underneath, the foundation is hollowing out. And you can almost feel the ground giving way, the sense that something big is about to snap. For a while, this illusion has been kept alive by liquidity, by the rivers of cheap money that central banks released during the pandemic. Money that flooded markets, inflated valuations, and created the appearance of prosperity. But that liquidity is drying up. Interest rates are high. Borrowing is choking. And as the oxygen leaves the room, we begin to see who was truly strong and who was simply floating on cheap credit. And when that becomes clear, the entire illusion collapses like a stage set under its own weight. And when you overlay the charts, stock valuations against household incomes, profits against wages, consumption against debt, the pattern is terrifying because it shows an economy that is no longer synchronized, an economy where markets rise not because productivity is up, but because speculation is up, where companies grow not because people are buying more, but because they're paying less to make the same, and where investors cheer layoffs as if destroying livelihoods were a sign of progress. This is not sustainable, and deep down everyone knows it, yet no one dares to say it out loud because the moment you admit it, confidence disappears. And in this system, confidence is everything. It's the glue that keeps the illusion together. It's what makes the numbers mean something. And without it, the market falls apart faster than anyone can react. History shows us this pattern clearly. It happened in the late 1920s, when corporate profits outpaced wages, and the gap widened until demand could no longer support prices. It happened again in 2007, when financial assets soared far above real incomes and the system imploded. And it's happening again now, only this time it's bigger, faster and more global, because technology amplifies everything, including mistakes. And because for the first time we've built a world economy that depends not on people, but on algorithms trading illusions of value. What makes this dangerous isn't just inequality, it's instability, because every dollar that flows into the top is a dollar removed from circulation at the bottom. And when the bottom weakens, the entire structure loses support, meaning the markets that look strong today are actually balancing on a shrinking base. And the higher they climb, the thinner that base becomes, until gravity does what gravity always does. The signs of this tension are already visible. Default rates on credit cards rising sharply, car loan delinquencies at decade highs, mortgage stress reappearing despite supposedly strong employment, and even though official numbers claim unemployment is low, participation in the workforce is quietly shrinking. Millions of people simply vanishing from the data because they've stopped looking, because there's nothing left to find. And that's the kind of quiet decay that precedes collapse. Not the sudden kind, but the slow erosion of belief. And that's the heart of the problem, belief, because the economy runs on it, markets run on it, currencies run on it, and once that belief erodes, no policy, no bailout, no stimulus can restore it quickly enough. Because when people realise that record corporate profits coexist with record consumer debt, that the stock market celebrates while living standards fall, that banks thrive while households drown, the collective illusion cracks, and once that crack becomes visible, panic follows. Fast, merciless, and uncontrollable. So what exactly is this gap that's about to break the economy? I'll answer to you right away. But first I want to remind you that if you want to start a successful YouTube channel like this one, which already made me $5,000 in the first month of monetization, you can join my free Telegram community with the link below. Back to the question before. What exactly is this gap that's about to break the economy? It's not just the distance between rich and poor, it's the distance between numbers and reality, between the fantasy of growth and the truth of decline, between the glowing graphs of financial markets and the dimming lights of ordinary lives. It's the space between production and participation, where profits grow but wages don't, where efficiency increases but opportunity disappears, where corporations win by eliminating the very people who once made them powerful. And it's this widening disconnect that threatens to tear everything apart, because every economy, no matter how advanced, depends on balance. Between capital and labour, between profit and demand, between the present and the future. And right now, that balance is gone. The markets are not pricing the real world anymore, they're pricing faith. They're trading the dream that somehow the digital layer of the economy can keep expanding forever, while the physical one withers away. But that's mathematically impossible, because the digital layer still feeds on the physical one. It still needs consumers. It still needs energy. it still needs trust, and once the physical world can no longer sustain the digital dream, the collapse will be sudden and brutal. When that moment arrives, it won't start with a headline or a single event. It will begin quietly, with liquidity tightening, with investors suddenly realizing earnings don't justify valuations, with small defaults cascading into larger ones. And then, like every bubble before it, confidence will vanish. And the same algorithms that drove prices up will drive them down even faster, because machines don't hesitate, they don't hope, and they don't believe. The irony is that the technology we built to make the economy more efficient might be the same force that makes it collapse faster than ever before. Because when speed replaces understanding, and automation replaces caution, you get markets that react instantly but think never. And in that environment, a small shock becomes a chain reaction, one that moves faster than any central bank or government can respond to, one that exposes how fragile everything truly is. And at the end of this chain reaction lies the truth we've been avoiding, that the economy is not numbers on a screen, it's people. It's time turned into value, it's work turned into meaning. And when you remove people from that process, when you replace participation with prediction, you end up with a machine that produces wealth but not prosperity, growth but not stability, and eventually that machine consumes itself. So as you hear about record highs and booming markets, remember that what you're seeing might not be strength, but strain, not health but heat, the final stretch before the break. Because no bridge can stretch forever, and the one we're standing on now, between markets and reality, between profits and people, is creaking louder with every passing day. The gap is widening, and history tells us what comes next. It's the same cycle of denial, euphoria, and collapse that has repeated for centuries, but this time it's supercharged by speed, by technology, by leverage, and by the belief that this time is different, even though it never is. And when it breaks, it will not be a correction or a gentle fall, it will be the snapping of that invisible thread that holds belief together. And when that happens, the charts will mean nothing, the headlines will mean nothing, and the numbers will fall back to earth where they belong. Because the economy can fake many things: growth, optimism, stability. But it cannot fake balance, and the longer we ignore the imbalance growing beneath our feet, the harder the landing becomes. This is not a prediction of doom, it's a law of nature. What rises too far above its base always falls, and right now, the base of this system, the everyday worker, the consumer, the real producer of value, has been weakened to the point of collapse. And when that foundation gives way, the tower on top, no matter how tall or digital or sophisticated, will come crashing down. So look around you, see through the headlines, listen to the silence between the numbers, because it's in that silence that the truth hides. The truth that this gap, the one stretching between the fantasy of markets and the reality of people, is no longer sustainable. And when it breaks, it won't just shake the economy, it will redefine it forever. The only thing to break now is the subscribe button. Smash that subscribe and like button, let me know your thoughts in the comments. And I also want to remind you that if you want to build a YouTube channel like the one you're watching now and make money from it, I opened a free Telegram community with the link below. See you there or in the next video. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions.